Hello, my name is Michael Grantmeyer, and I'm a partner in the Emerging and High Growth Companies practice at Osler. For the third year, we have published our Deal Points report, Venture Capital Financings, a comprehensive study of 486 anonymized venture capital and growth equity preferred share financings completed by the firm from 2020 to 2023. These deals represent approximately $8 billion in total transaction value. This report is unique within the market as it draws on publicly available data on venture capital and growth equity financings, as well as Osler's confidential, anonymized data sources. The 486 financings in this report represent, as a random sample, only a portion of Osler's significant overall financing deal volume. In fact, from 2020 to 2023, Osler represented clients across the Canadian emerging and high-growth companies ecosystem in more than 1,100 financing transactions, with an aggregate deal value of approximately $14 billion, of which approximately $2.2 billion were financings that closed in 2023. In 2023, we continued to see the effect of higher interest rates, among other factors, impacting the Canadian economy and forcing a return of venture investment to pre-pandemic levels of activity. At the same time, our data shows that there were more down rounds and flat rounds than in prior years, as cash, conservation, and bridge financing strategies were exhausted, forcing companies to go back to the market to raise capital in challenging market conditions and on less favorable terms. That said, resilience and renewal characterize the Canadian emerging and high-growth companies ecosystem in 2023. The ecosystem demonstrated resilience as investments and investment opportunities in artificial intelligence and clean tech materially increased. And at the same time, Ontario, British Columbia, and Quebec continued to serve as the major engines of the Canadian venture space, while the Prairies and Atlantic provinces continued to emerge as critical destinations for venture and growth equity investment in Canada. Renewal also characterized 2023, as early-stage financings accounted for 78% of all such financings in the Deal Points report, demonstrating investor and founder confidence in the future of the emerging and high-growth companies ecosystem in Canada. For those financings that closed in 2023, and despite an uptick in investor-friendly terms, key venture financing terms remained largely consistent with prior years, where we found that typical key terms were driven by an adherence to the CBCA model agreements in Canada and included 1x liquidation preferences, no participation rights, non-cumulative dividends, broad-based weighted average anti-dilution rights, and no redemption rights. For 2024, our team continues to monitor the ongoing growth in markets such as the Prairies and Atlantic Canada, and the growth of industries like artificial intelligence, ag tech, and clean tech, all of which are uniquely positioned to experience incredible growth in Canada. We hope you will find the information in the report valuable and informative, and please reach out if you have any questions or if we can help your company move to the next stage.